Good morning, good afternoon, wherever you are joining from today. Welcome to our discussion around digital transformation, where we're going to be talking about 5 things that we want every risk manager to know when going through the transformative process for their risk management program. My name is Knut Ullman. I'm the Internal Audit and Compliance Product Manager at Risk Connect. And I've been in the risk management industry for about 15 years now, helping organizations transform the way they used to be working from their previous processes to some sort of a digital format. I am very excited to be joined by my panel of guests, and I'll be going through some brief introductions here, starting with Renata Rudlinska. She's the Chief Risk Officer from MetLife Poland and Ukraine. Thank you for joining us, Renata. Where are you at from a digital transformation standpoint?
All right. So the first question before we start the digitalization process and thinking about the digitalization is the question to be asked whether we have matured processes, so well-established processes. So whether we know what are the roles in the processes, what we expect from this digitalization also. So we need to be sure that we have all steps designed, agreed, and we know who is going to be maker, checker, and approver, whether this is agreed not only in a particular entity, but globally. I'm thinking about the big organizations that want to unify processes. So this is a very good opportunity for unification, and it's much easier than having it done manually. But without establishing what is expected from the process, it will be very difficult to digitalize, because then we don't know what to expect from the system that is going to help us in this process. Yes, so this is the same like in any other, I think, process that is going to transform from manual or Excel-based to system-based. And so the first thing is to think what we should achieve. So what is our target? What we are going to digitize, whether we need only a register for this process or maybe a workflow management. So these are the very, very basic questions that should be asked to finally end with something that will help us and enhance effectiveness in our processes before we start even thinking on spending money on application.
Absolutely, very great points. We're also joined by Jamie Day. Jamie is the head of operational risks at Arbuthnot Latham Private Banking. Welcome, Jamie.
Hello. So it's the head of operational risk at Arbuthnot Latham Private Banking. I just realised I do need to update that picture. I had hair in that picture. As you can see, it's definitely fallen out.
How has digital transformation of risk management processes affected your organization?
So I joined the business 4 years ago. I think at the time, operational risk was very much managed out of our compliance function on spreadsheets. It was very, very basic. And we essentially had the lucky task, it's called a lucky task, or the painstaking task of looking to, one, implement a risk management solution that was fit for purpose and proportionate to the business, but also bring the business on a curve of culture and improving the behaviour and the culture around risk management. So the two had to go hand in hand. For me, I always bang on to my own team, and I've banged on for the whole time that most of the risk solutions that we looked at, we could use as a risk team, but it's all about the end user. It's about if I'm going to get people within my business understanding their responsibilities, understanding what we require from them, and most of all, making sure they understand what risks they're actually dealing with and managing, they need to be able to use the solution. So that really drove all of the decisions that we made to, one, get the right solution into the bank, and then secondly, how we actually would go about implementing that. I'm sure we'll go into details as we have the discussion, and I can elaborate more. But really stripping it back to basics in terms of what does the end user care about? They care about being able to see their risks. They care about being able to see the controls that are performing or not performing. And then ultimately, it's then elaborating further from that as we continue to mature. So as a bank, we're not quite at a point yet where I would say we're finished. I mean, who is? But we're not in a position where we are. We're still developing. So, for example, we're starting to move our KRIs onto the system. We're starting to really use the system in reporting across all different committees, regardless of levels within the business, to change or drive that culture. But yeah, that's probably a good summary as to where we're currently at.
Yeah, it really becomes more of a transformational and educational process as you're trying to explain, how people should be thinking about and looking at risks. Yeah, thank you for that. We're also joined by Dr. Catherine Ann Muir, who's a board member for the Swiss Risk Association. Thank you for joining us, Catherine.
Thank you for...
Oh, go ahead.
Go on.
I was going to say, you might be able to provide a slightly different perspective in terms of what do you see from the digital transformation of risk management processes.
Yeah, just wanted to say I'm currently not in an operational job. However, have been for many years a chief risk officer in insurance companies. And what I see in insurance companies in general, they are pretty well digitized or have their tools in system for the GRC. So for governance type of things, controls, internal control system. However, not for the enterprise risk management, say strategic risks, etc. They often have it in Excel, in PowerPoint, or whatever. And I think companies would benefit to bring this into one system, not only for the risks per se, but also for the lines of defenses.
Absolutely agree. Thank you for joining us. And finally, we have Alexei Bogatov, who is the Vice President and Director of Integrated Risk Management Department at Sberbank. Thank you for joining us today, Alexei.
Hi, great to see you, and thank you for inviting me here. So I think the challenge that we face as a bank, and we started to face this digital challenge years before, when it was decided that our kind of a strategic model would be that we want to become a technological company with a banking license. And from the good old times where we have been just a bank with the normal banking operations, we shifted into something of a much bigger complication, digitization-wise. Now, as we speak, we have 1,600 models running in the production by now. And in a month, we do releases, IT releases, which are measured in tens of thousands. Actually, it's 130,000 releases that have been done just last month. And that, of course, poses a major challenge to the risk management function of such an institution.
Absolutely. Absolutely. So one of the first topics that I wanted to talk about in terms of understanding digital transformation of your risk management process is thinking about preparation. We've all helped someone move before, and it usually goes one of two ways. You show up to help them move. There's a truck there. They've got everything boxed, everything labeled, everything ready to go. And you just start grabbing your boxes, putting them in the truck, and it's a very smooth process. The other way it goes is you show up at their house and it doesn't look like they've done anything. So now you've got to go through the process of helping them pack as well as load everything into the truck. I've seen this happen a lot of times too when people are going through their transformational process where it doesn't look like there was a whole lot of self-preparation done by the organization when thinking about transforming and moving into a system. Renata, when you think about preparation, is preparation extremely important when doing and thinking about digital transformation of your risk management process?
Yes, thank you. Preparation is important in terms that I already mentioned just at the beginning of our webinar, of our discussion, to know what we are going to digitize. So we need to be sure whether we have accomplished the process of implementing risk management into an organization, whether we decided on how this unified risk management should look like in the whole organization. If it's agreed, then we can start moving to this digitization, thinking about what we want to achieve. So this is, I think, crucial to end up with success after this digitization. So we need to have in mind our targets. So what we want to achieve, whether we want to have only register because we can afford only for register, or whether we need to have a workflow management plus communication tool because we need to communicate the whole big organization, or whether we need a reporting tool because of gathering information and reporting on management level. So all these questions need to be answered to be able to choose the proper solution, the proper application or system, and adapt this to our needs. So starting with having a well-established process, risk management process, defining our target, keeping those targets, it's something that is critical to end up with a good solution. We also need to have in mind a little bit wider view. I mean, having in mind all roles that will be, all people that will be involved in this process, to have it somehow inbuilt in their daily processes in our as a risk manager's process. We have such tool already in MetLife and we use it. So we have some experience also in this area. We've seen lots of different solutions. So yes, it's critical to have a solution that is embedded and into the culture of organization and the processes that organization already have, and the systems also somehow to make people using this in a natural way.
Jamie, you had mentioned before that your organization moved from what I'm assuming is to be multiple spreadsheets that captured risk information. When you started consolidating that information together, did you notice a lot of inconsistencies in how risks were being described, categorized, classified, reported on?
Yeah, so I think first thing we was in a very lucky position where I think it's lucky where we could adapt our risk management framework and what we wanted to do, depending on the digital risk solution that we went with. So we weren't in a position where we had an all-encompassing, complex risk management framework that we needed to find a digital solution that meant we needed to make lots of customizations. We were in a position where we were lucky enough, as a relatively small bank at the time, to essentially mold and merge based on the solution we found to be most practical, with the user being really the main focal point of what we were looking for. So I think that's the first point. So that brought with it a lot of positive. I know everyone's not going to be in the same boat if they were looking to digitize the way the management, but we were lucky enough to be in that boat. I think the second part, we found lots of inconsistencies when we did the initial analysis. Mainly the inconsistencies were driven probably by a lack of knowledge about risk management and what was required across the business, in terms of individuals within certain departments being responsible for assessing risk without perhaps having any real guidance or any kind of oversight and direction of what they'd be looking to do. Duplication of risks, duplication of assessments not making sense. I mean, the usual. With any kind of business, you always, I think, no matter what, in my experience, you always still have that, but that was widespread. I I wouldn't go as far as to say we ripped up the document and started again, but we wouldn't be miles away from it if I said that.
And Alexei and Catherine, what have your experiences been as far as, is preparation extremely important when thinking about the digitization process?
Sorry, was that a question to me?
Yes. Yes.
Yeah. Okay. Well, I would give you a very loose quote, so to say, because I don't remember that exactly, but I think one Prussian, so Prussia, meaning the essentially Germany, general once said that your plan is good up until the moment you face the enemy. And I think this is exactly what you see when you go through the massive digital transformation. Obviously, everyone has a plan. Obviously, everyone wants to be aligned. But then things go in the kind of all sets of directions. And I think the most critical part is, of course, that having said that, that doesn't mean that you don't need to have a plan. You need to have a plan. But the most critical part is actually to have an organization on the risk side which is ready to adopt. And I think when you do digital transformation, you need to focus on moving your risk into the agile much earlier than you do rest of the organization, because only that allows you to kind of have a grip over the things that change at a pace you would not expect in the past.
Agreed. And that kind of parlays into the second topic that I wanted to discuss, and that's where we think about when we're looking at and gathering up all of our risk information without any sort of clearly defined definitions or taxonomies put in place around that. It becomes difficult to align the way that you're currently working with some sort of programmatic methodology. Catherine, can you comment a bit on the importance of detailing and defining what your taxonomy approaches is and definitions around how you want people looking at risk in identifying certain aspects of risk?
I think it's incredibly important that you do that before you start or at the start of your journey, that you know what you talk about, that you know what you want to gather and what you want to display and what you want to have. And especially if you take several functions together or several lines of business or say risk and compliance, you have to agree beforehand on what you're talking about. It's tidy work. It's a lot of work. It's a huge effort. And what we did when we digitized the internal control system, we even hired a consultant when we had done these taxonomies and the elements to get a fresh outside view and make sure that we didn't forget anything important.
And Renata, going through the process that you have, having that established, did that help people align their thought process to where you were going with the digitization of your risk management process?
This process was, going pretty smoothly because we had already the same process that we had on Excel moved to the system. But what I would like to emphasize is that I think it's critical. It's to agree the level of granularity of taxonomy. So I mean not only the risk taxonomy, but also processes, sub-processes, the levels of granularity of risk. So the numbers of categories that we will have, how deeply we are going to go, what kind of opportunities in the system we want to have. So in case we have a group of risks and then a subgroup, whether we need another third layer of such taxonomy. This all make the system more complicated, but also you can adjust it to more specific needs. But both have advantages and disadvantages. The more complicated system, the more time it takes to fulfill. The more difficult and sophisticated it is for the users, but also provide more information. So this taxonomy is, I would say, in general term, but it talks about many aspects of the system that we are going to have. So the layers of the system, number and categories of users that we're going to have, steps in the process, how many we are going to have, the approval level, whether we are going to need we need only one or two or even more. The override of the assessment, the connection with other functions. So there are lots of questions in terms of this taxonomy that needs to be asked and defined, having in mind all the time the target. So what we are going to achieve by this system, what it is going to serve in our company, as in organization. So there are lots of questions. It's good to view some solutions to see and inspire yourself to decide on the final one. But all these aspects from different angles needs to be taken into consideration.
Excellent points. I've also popped up a poll question asking, how is your risk information currently captured? If our attendees could please just, to the best of their knowledge, indicate where how they believe their risk information is currently being captured. I'll pop up the results here in just a few minutes and leave this up on the screen while we're going through our discussion. Jamie, you had mentioned, I think you had said that you can add some additional thoughts on this as well.
Yeah, I think it's good to be open and honest in terms of my learnings. Implementing a framework for using a digital system. We made a good point there around the hierarchy and the levels within the hierarchy. We focused a lot of our effort on, I mentioned culture before, on making sure that we had a hierarchy or a risk hierarchy that was essentially fit for purpose. The taxonomy needed to be fit for the bank, and we adopted a regulatory focused hierarchy to make sure that we was on track. We spent a lot of time training up individuals in terms of understanding what the risk assessment would be, whether it be a 5x5 grid, whatever the decision it would be. The methodology behind that, we spent a lot of time prior to the rollout to make sure that users understood that side of things. In hindsight, I think we only probably did about half of what we should have done. And what I say by that is that we are currently trying to tie back risk assessments back to risk appetite, risk tolerance, when actually the opportunity to do that from the outset perhaps would have been better in terms of letting individuals or being informed business units know of where the bank currently sits in terms of its attitude to risk before we even get to a step where we're asking them to go out and do an assessment. And I think the second part of that is we didn't potentially look at how the bank would record, or business units would record, controls. It's a more granular level, but an important level nonetheless in terms of on the front, in the front business or in the actual front end. How would they record controls? And I think we're currently really getting to grips with remediating that in terms of inconsistent control descriptions. Some controls not making sense, some being assessed incorrectly. We're kind of rewinding back from that again, and we're doing work to make sure that that becomes consistent. So for me, I think there are definitely learnings that me and my team would take away from that. I wouldn't call them as a negative. It's all, everything we go through is a positive. But they would be the two things that if I was to do that again, I think I would get all of that in a line first before progressing any further.
So that moves very nicely into the next topic that I wanted to discuss, and that's after thinking about the fact that you've gone through this preparation and looked at your current risk practices, understanding what you wanted to move into some sort of a digitized system, understanding the fact that you may have gone through some of this work and defining how you want people to approach risks and controls and understanding what your taxonomy is. How important is it to define those requirements in some sort of a documented format and really understand what are our expectations from the system before you even move into a system? Renata, did you want to go first on that one?
Starting from the manual process or Excel-based process and going to the system, it's good when we have certain points agreed. And very crucial thing Jimmy mentioned about this consistency, because we can agree on consistency and prepare library to have a list of items that can be selected for certain aspects or like type of risks, type of control. But of course, we cannot probably, or it's maybe quite difficult to have a consistent description of controls or risks, especially in big organization with many entities within it, as we need to capture a specificity of each entity, yes, but it needs to be on the other hand understandable by the holding, by the organization, and among entities. So this is a quite big challenge, I think, and there is always discussion whether we should use consistent and same description or we should allow for individual approach in here. But what is also important is to agree not only within the risk management function, but also among other functions if they are going to be involved in the process. And I think about the compliance or internal audit especially, but also ITRS, that are also using such system for controls, for testings, for auditing purposes, for registering issues and action plans, and for monitoring the status of action plans. So there are many aspects, and this is really, really helpful if we can cooperate within each function together to have a solution that really unifies and make it consistent, some certain terms in risk management, and also taking into consideration this audit and compliance needs, because then it's much easier when we assess control or assess risks, and we have information from the audit coming from the testing and auditing audit reviews, yes, auditing processes. So then it really helps, but this means that this whole process of digitalization is much more complicated. As usually in case of manual processing or Excel-based processing, each function is doing their own process and following their own taxonomy, and there is a mismatch usually among them. So yes, this is something that takes some time. It can be done, in cooperation while having workshops, and this is really good to have understanding among each other, but also sometimes it just needs, a top-down decision to be able to process, to move forward with such transformation. As this is quite complicated, as it involves a few functions, but it's worth work done within this process.
And I think so. I'm just popping up the poll results here for us to take a look at really quickly, and it's interesting to me, but not surprising that just at a glance here, we're looking at roughly 60% of the people on the call right now are storing their risk information either in spreadsheets or multiple systems, and then capturing, excluding the spreadsheets and Word documents. You're looking at, or if we include, the multiple other systems, like roughly 75% of information is stored in multiple areas spread throughout the organization. And this kind of goes back to our point one when we're talking about preparation and trying to get our arms around where's our risk information currently stored. How complicated is it to apply a methodology on top of that when we're working across all of these multiple systems, and kind of just coupling onto your point right there, Renata, when you've got all of these different parts of the organization reporting the risks and identifying the risks their own individual way, it really kind of also goes back to what Jamie was saying, that there needs to be a really informative education process in terms of, we understand everyone's involved in risk, but we need to have a more consolidated view of risk, and it makes it very important to have those documented, those requirements documented, and that taxonomy identified.
Maybe Knut, if I can join in.
Yes, here. Absolutely.
What I always think when you have a system that has grown, or a process that has grown over years, before you digitize it, you have to somehow simplify it. When I look in the insurance industry, the last, say, 10 years, it was very, very much driven by what regulators wanted, especially also in Europe, Solvency II. And you have worked as a risk manager a lot to make sure that you comply. And ultimately, why do you do risk management? To save your company. And you have to make sure that the business is your stakeholder. And I think if you start to digitize, this is a good point in time where you bring in all stakeholders groups. Of course, always have in mind that you are compliant and that you satisfy regulators, but that you also have business included. And I would even suggest that you do some design thinking before you start, or while you start your process.
So I think that transitions so nicely into the next topic that I wanted to cover, and Renata had already touched on it a little bit. And that's when you're transforming your risk management process, it's not only the risk management group that needs to be informed of change that is happening. Do you find it, you were just really touching on it there, do you find it extremely important to collaborate with other assurance groups across the organization? Because changes you might be implementing in your digital transformation of your risk management process could directly impact other parts of the organization. And have you found it's better to include those groups in conversations up front rather than we went through this entire process, now here are how things are going to change for you, even if you weren't involved in that conversation? And Catherine, you were just, you were touching on it and alluding it, and if you could expand just a little bit more on the importance of that.
Yeah, it's actually my favorite topic, I have to say. I'm very much for bringing, if you have a system, bringing in all lines of business, so all lines of defenses, so that you not only have the business, but risk and especially audit, that you have one way on looking at it. I think it's too costly if you have the various functions doing their own stuff and doing their own digitization, I think you have to somehow force it into a system. You have to simplify, you have to bring things together. Otherwise, it just is too expensive for the companies overall. And what I can see, and I completely understand why it is coming from, that we have these functions, sometimes in silos, sometimes not, just working through a small interface. I think all these functions, they need intelligent and highly educated people. And everybody has his most fit process and thought through process, and then it's difficult to bring it all together because everybody wants to make it that good as possible. And so if you let that further grow, it's just really costly for companies, and you have an overspend, and you have probably an over controlling, that three groups look at the same thing and it's more or less the same thing, but named a bit different. So I think going forward, this is really something companies will look at and will need to include in their thinking.
And so while we're on this topic of discussion, I've actually popped up our next poll question, which is talking about how many other systems will your digitized risk management system be consuming information from or passing information to? And this is where kind of that collaborative aspect is so very important, because without that communication and that agreement among the different assurance groups of what information will seamlessly pass between systems, it gets very difficult, and you end up with disjointed processes where I'll receive a file from someone, but then I still have to transform that file before I can load it into my system, which really delays a lot of things and introduces a lot of opportunities for data errors. Alexei, I wanted to go back to a point that you had brought up earlier in the conversation where you were talking about the number of processes, the automated processes that were going on in your organization. Was there a lot of collaboration with other groups when you were digitizing the risk management process and understanding how important it is?
I get the point. So put yourself for a second in our shoes, right? So you are the CRO of Sberbank. You have 230,000 employees doing some stuff every day. Now, try to fix risk management without aligning with the different stakeholder group. That's essentially impossible. And I think one of the learnings that we have made in our digital transformation, and this is the perspective of a risk manager, is that you need to be faster than the rest of the organization. The reason being is that if you are fast in implementing controls, in setting up proper governance, in setting up proper organization, then most likely it would be much easier to proceed. Because once you are late to the already changed setup, it is already considered to be a burden and a kind of a heavy lifting stuff. But if you're the first one in the field, then most likely this would be something that would be there to stay. So, and also kind of getting back to the question that you've been talking about before, whether it's critical to properly define everything up front. It is critical, but I think the most critical when you talk about digital transformation is to fail fast. So you need to be first, and I think that has even higher priority as compared to be super strict and religious about the things that you do. You should be religious, however, about the principles that you try to implement and about the tone from the top. The risk culture is everything in the digital transformation.
I think that's an excellent point in understanding that if you have your overarching principles defined, the small things where you can fail fast it's much easier to correct those as long as you're aligning with the principles and not enforcing that rigidity. Jamie, it's interesting, because we've got Alexei coming from a very large organization, but then we've also got your perspective. Can you provide some thoughts on this as well?
Yeah, so being a smaller organisation, I completely agree with what Catherine was saying in terms of without engaging other departments, without engaging what is already in place within the business, we wouldn't really get anywhere near the level of output or value from the risk management system or solution that we use than we do currently. I mean, that can range from the engagement of audit, our audit function, making sure that they are looking at our risk management solution when deciding, one, the audit plan, but two, when they allocate audit actions or etc., making sure that the risk management framework is part of that. The compliance function as well, making sure that it again drives that, but also the more not BAU processes. So risk event management, making sure that the business is ultimately a risk event can be raised pretty much from anywhere in our business, making sure that they understand the importance of why they raise it and how that links into the hierarchy. And then other areas, things like risk acceptance, KRIs, there are already established processes in the business, but again, it's not just telling people we want you to do it this way. It's why do you want it to do it? Why do we want you to do it that way? And what is the output and what is the benefit? One way that, from my experience, that I found useful in terms of getting people to understand why we're changing things and why we're not changing it for the sake of it or why we're trying to improve things, is the output that comes out of the system being consistent and showing a clear message across all of our areas of risk committee, whether that be our board level risk committee, whether that be the risk committee that sits below that, or whether it be one of the sub risk committees, whether it be our operational risk function or our fraud committee, showing them outputs. So showing outputs like risk events, showing outputs like audit actions, showing outputs like how the risk assessments are being affected by the different levels of testing that's being done in the business. That is vitally important. People then see from top level down how it affects it, but they also see it bottom level up in terms of how it affects them. I didn't mention testing, but I should have done. Testing is a good example where you have testing being done in the business. In my opinion, a testing isn't that useful if it doesn't relate back to your risk management framework. If you can't work out what control is under or what risk is under threat as a result of testing failures, and you can't link them together, then I think that's a big hole. So we worked with the business areas that did testing to integrate them onto our system, and we showed them the benefits. We showed them the output. We showed them the ability to even manage their testing programs. I think I've said enough.
I think that those are extremely excellent points. And one of the reasons why, I wanted to touch on the collaboration is when we think about the fact that we're working across all of these different groups, they may have procedures and processes established in place where we know we're not going to be able to dictate the fact that we want them to use our risk management system. But we can work with them to understand what systems they are using, what information is important from those systems, and then consume that information, which is why I really wanted to focus in or have this poll question up here and just see, even looking at things, when we're talking about digitizing your risk management process, the expectation is you're going to be most likely interfacing with anywhere between 1 to 6 other systems. Now that's complicated because there's a lot of conversation and a lot of communication that needs to happen around that. And that really kind of boils into the last topic that I wanted to touch on. And Jamie, you were really just focusing in on it quite a bit there in your last part of the discussion, but it's the communication and training program that needs to go along with your digital transformation. How are you preparing both your board, your C-suite, your risk managers, but also the business individuals that might be providing some of this information or collecting some of this information that previously didn't have to? How are you preparing them for the change and understanding what are you actually doing?
I don't think there's anything revolutionary from what I'm about to say in terms of approach. I think it's a fairly common sense approach, but we look at it from a bottom up and top down. So from a bottom up as a user in the business, whether I be a user that's doing testing or a user that's doing risk assessments or even responsible for the risk of a business unit, we provide I think we provide a quarterly drop-in workshop that we do. Previously it was face-to-face, but now it's done by Teams, where we show them enhanced or new functionality to the system, but also a refresher training on actual what is a risk assessment, why are we asking you to do what you do. So we spend a lot of time doing that. In addition, from the top down, we are open with our risk committee. So we have a sort of risk committee where we essentially overlay how the risk framework is currently being managed, where is it being reported. Again, I think I link back to what I just said around making sure consistency of reporting out of the solution that we use. So what is it telling us? We educate people in risk committee on a regular basis about what is it actually telling us, the so what question. Mm-hmm. A combination of, it's very high level, but a combination of spending the time to engage with those on the ground doing risk assessments, managing risk, but then also using the same approach but more of a visual system reporting approach for those from a top down, I think really has given us quite a good level. Now, I'm not going to sit here and say everybody in our business is a risk professional and understands everything about risk assessments, but those that do have a good level of knowledge, and if they are stuck, we have a level of resource available to assist them to be able to improve their knowledge. But it's always a balancing act, right? It's always changing.
Renata, from a larger organization's perspective, is that equally as important for you? The training and education around helping people understand what they're doing now.
Yes, it's critical. Ideally, the situation is when the system of a solution is very intuitive, but often it's not, because we are developing this application. I mean, not MetLife, but the world on the market, and they're new, so everyone is learning on mistakes, and they try to prepare anything that is best, but also there's limited experience in that topic. Yes, so ideally, the more intuitive solution, the better. But the training for all participants is crucial. They need to know how to proceed, what is expected from them, the timeline, and they need to understand also what for they're doing it, to have a common target also, and understand the values coming from. So we need to also provide some marketing in this area. So training was critical. To avoid many questions during the process, and to eliminate frustration from people, and also to enable management how to read results. Yes, what we are going to provide, what they can see, how they can use those results, and how they should read them all together. Yes, so from the risk, compliance, and audit. So all these things needed to be provided, and clear training and clear training materials, so that people can check whether they have any questions or doubts during the process. Yes.
Alexei, from your organization standpoint, do you offer quarterly trainings, retrainings, things like that?
Yes, we do at large extent. As I said, I believe that doing the education and the risk culture part is critical for the digitization. We even have a dedicated set of people which are called a risk culture. So they are, if you will, they are an internal PR department for the risk management. and they kind of do all sorts of the stuff to make sure that people are engaged. There is a gamification, there would be an internal videos and like you name it, stickers and challenges and stuff. We also have a so-called CRO school. So CRO school is basically driven by our corporate university, and we provide a professional training for the rest of the market, but also for the internal employees. But as said before, tone from the top trumps everything else over and beyond. And I think that's the most critical element of the training and culture when it comes to the risk management.
Excellent. So in summarization, we've talked about a number of different topics and how it's important when you're thinking about digital transformation. Even if you haven't started looking at or examining vendors, there's a number of things that you can start doing right now to help you prepare for success. And one is preparation. Take a look at and understand what's currently going on in your organization from a risk management perspective. Start gathering some of that information and examining it to see, is this information easily going to be able to be ported into a technology of some sort, or do we need to start cleaning things up and looking at things and starting to apply something like definitions and taxonomies on top of that? So understanding what's going on in your own house, looking at and starting to, implement and define things like terminology definitions and taxonomies, but much to Alexi's point, understanding that the principles of it and not the individual data elements of it are much more important. Those data elements can change and be modified over time, but having that overarching methodology in place and understanding the importance of that is extremely important. And then start documenting what your expectations from the system are, right? What do you need from an approval process workflow or reporting output or a risk assessment process? And that's going to help you understand when you're working through your implementation, where might we need to zig versus zag because we want to do it this way, but the system doesn't quite do it that way. Are we going to modify with the way that we're working to align more closely to the system, or are we going to request that the system change in order to accommodate us? After that, you're going to want to collaborate with the different assurance groups to ensure that there is a well thought out communication plan and understanding that information might be coming from a number of different departments. And if we don't collaborate with them to ensure that there is an effective and efficient flow of that information both into and out of our digitized risk management system, we could be setting ourselves up for a number of inefficiencies and complications. And then, it sounds like everyone is really on board with the fact that there needs to be a robust training and communication system in place for both your risk managers, your end users, your C-suites, and your boards to make sure that there's a very well thought out baseline understanding of risk throughout your organization and how you should be looking at it, thinking about it, assessing it, and reporting on it. And I think that those 5 things are really going to help organizations transition smoothly into a digitized risk management system. So we've got a couple of questions coming in, but before we get to those, really quickly, I'd like everyone on the call, Renata, Jamie, Catherine, and Alexi, knowing what you know now and everything that we've discussed here, what's the one thing that you really wish you would have done differently when you started your digital transformation process? And we'll start with Renata.
Maybe not differently, but I will strongly recommend focusing on having a solution or system that is user-friendly. This is critical to save our time and to involve people to use this system. and to make everyone happy with the process that has higher effectiveness. Yes.
So in the past, I've heard before, everyone always wants to focus on things like executive dashboards and executive reports, but it sounds like it's much more important to focus on the people that will be providing the information that will roll up to this.
Reporting also can be user-friendly. I mean that the report has to be clear and understandable by the receivers. So it's from the beginning to the end, the user-friendly, not only for maker or checker or approver, but also for external user. I mean external, so user of output of the system.
Alexei, what's your thought on that?
Well, I need to give a bit of a context so that my reply is clear. So we have shifted from being a bank to being a technological company, and that means that basically there is nobody who works in the change is not in the agile. So everybody is in the agile teams in the products. And I think if I go back in time, and I think what we should have done differently, I think it's kind of a naming and training risk champions within each and every product. That would have been, a savior for us now.
Jamie.
I have to echo what Renata said in terms of user. When you're looking for a digital solution, don't put your head of compliance sitting there. Don't put someone within your team sitting there to use the system. Get somebody in the business that's actually going to use it. I think we did a good job with that, but that really should be the catalyst, in my opinion, for trying to find the right solution. I mentioned earlier about what I would do differently. I mean, mainly it would be to spend a bit more time to make sure that you have looked at all aspects of the risk framework. So I mentioned earlier about how does the system link back to appetite? How does that then translate through to risks? And then how does that translate through to control management and your assessment methodologies?
So I think I'm the last one to go.
Yes.
What I thought I could have pushed more is the digitization in automating controls. People always said it's not possible, it's too much work, and I think that's the way to go, to automate as much as possible, and also through application of new technology like artificial intelligence, natural language processing, machine learning, and the like.
And I think those are great topics, and that really, in order to facilitate those things, you need to be well prepared in order to ensure that your data can make sure that those things happen and have some of those definitions and taxonomies in place. It's a great point. We've had some questions come in, and one of the questions that came in is, what is the optimal level for risk taxonomy? I think that this is an interesting topic that a lot of organizations have questions around. Renata, would you like to?
Yeah, thank you. So I would say not too long, not too short, as it has to cover a holistic view of risk profile, but on the other hand, we want to avoid overlapping. This is quite challenging, to avoid overlapping of certain risks categories, because then the consistency is threatened if we have overlapping risks, because someone can assess particular risks under a different category than others. So not too long, not too short, and flexible. Because if you decide in this dynamic world that you need something new or something defined in a slightly different way, let's make it possible to change it. Yes. In future. So flexible, not too short, not too long, because if it's too long, it's very difficult to capture all risks and to think where particular situation or control should be assigned to which risks. So it shouldn't be long. I mean, it's difficult to say whether it's 30 or 20 risks that is the best. It depends on organization, whether it's bank, insurance company, etc. But definitely it should be the list that can be remembered, and that also covers the holistic risk profile of a company.
And I think it kind of, that's a great point, and it is emphasized by both Alexi and Jamie in that we want to make sure that our end users understand risk. And if we have an overly complicated risk taxonomy, it gets confusing. And to your point too, if there's overlap or blending where it's like, I'm not sure if it's this risk or that risk, again, that ambiguity and confusion comes into play. And the user friendliness and usability of the system really kind of takes a hit. Alexi or Jamie, did you guys have anything to add on top of that?
Well, I would say that it should be fit for purpose. On a certain level, that should be kind of a short, condensed, understandable. But then when you get deeper into the certain type of risk, then you want to classify that. And this also kind of gets back to the point I was making before, that the most important is to have a proper organization where you are properly organized around the proper structure. That makes things easier. So it should be fit for purpose and depends on the level from which you look at that.
Excellent. And then we have one final question coming in here. And the ask is, should risk managers rely more on financial econometrics or machine learning methods in finance to tackle operational and financial digital risks? And Renata, you had mentioned that you had popped in and said that you wanted to comment on that.
I would start with the question whether the organization have enough observations to use econometrics or statistics. Whether from inside or from the outside of the market. So if there are observations, so there's a history of registry, it's very good, and there are solutions that use such statistics analysis, and they give some good results, especially for capital charge calculation. So the calculation of the capital needs for particular risks, for example, with operational risks. So this is good solution, of course. But on the other hand, what happened in the past doesn't have to happen in the future. So artificial intelligence from the very early beginning, with cautious can be somehow involved. I mean, starting being involved in the process. But here, the carefulness is recommended as we need to observe the results, yes, whether they are intuitive or not, whether they fit what we expected, because still I think this is something new, and it also takes time to build such artificial intelligence solution that will benefit for us. But starting, why not? It can be helpful in future, I think.
Well, thank you for your response on that. We are currently at time. I just wanted to take a moment to thank everyone for attending this session, as well as thank you to the panelists. I thought it was a very informative and helpful conversation around, what risk managers should be thinking about when they're going through a digital transformation of their risk management process. Thank you, everyone, for attending, and hopefully we can point people in the right direction and help them think the right way about transforming their processes. Thank you.